Okay, a quick update. The New York stock market's about to close. The last trade that we had open here was on the euro yen. Now, I wanted to talk about some of the volatility this morning and how choppy it was on some of the other currency pairs. You probably traded through that. I did experience a losing trade on the pound dollar, and I'll show you that in just a moment. But this was the last trade here, and I was long the euro yen. This is the 1 hour time frame. This is the continuation breakout trade. It's actually, there were two different levels, so you have to be careful with this. Now, the reason I'm going to review this one is because I had a couple of different questions where people were asking which resistance level I was going to use to signal that breakout. Now, there were obviously two different levels that we needed to be paying attention to, which was last week's high here at this level, which was approximately 114.17. And then the week before that, we had this high over here at 114 point approximately 40. Now, this was the one that was the most obvious that I was talking about over the last week and a half or so. This high, this low, and I mentioned that in order to trade a decent continuation breakout trade, it would have to break out of this range. It doesn't mean that I have to wait for price to break out of this range here in order to trade it, because there are other strategies that I can use. It's just to trade it as a continuation breakout trade. Now, we earned approximately 52 pips on this breakout and this move here. I waited after the pullback because I could anticipate, I could see that the pullback was going to occur here after that initial breakout here, which was the previous week's high, not last week's high. That's the one that I was targeting, not this X. This was the first one to be paying attention to, where that red X is, but this was the most significant high. This was put in place, and for the most part, everything else just went inside or traded inside of that range. So again, after that initial break right here, that signal candle, I could see that we were probably going to get a pretty deep retracement. So I did not get in with that 3 pip entry. I waited. And that's when I got in back up over here at 114.66. Now, one of the reasons that I did that was that on that signal candle, the first one that broke out of the high back over here from September 20th, there was divergence in the indicators. So even though I see the 1 hour candle close above support or resistance to indicate a signal candle, I still have to confirm the signal candle to make sure that all of the indicators are lining up correctly. And if they're not, that usually would lead me to believe that we're going to see a retracement or possibly a head fake. So I wait for price to then turn around and go back up again and then take out the initial entry or just above it with more momentum and volume. And at that point this morning, as you can see, it was a pretty strong move. Once it started to pick up momentum, it popped straight up, and you probably saw in the news what that was due to with the euro currency. So this pretty much followed along with the euro dollar this morning. Now, I mentioned that there was a losing position here. So we had actually a few trades here on the pound dollar. So we were short the pound dollar again on another continuation breakout trade. And then it looked like it was going to trade, like I was going to get a trade off of support to trade it back up again. Now I put a relatively tight stop in a situation like this. I ended up losing 18 pips on this trade going back up again, trying to trade the bounce, and then it dropped straight back down again. Now, I wasn't really necessarily trying to fight the trend. I could see what was happening, that it was forming a support low and that the dollar was finding some resistance. And it's not so much that what happened with the euro dollar moving straight back up that I expected the pound dollar to move up with it or as fast. It looked like you could see that it was going to follow along. There are days when you get the sentiment where and you see traders will sort of trade the pound dollar and the euro dollar together. Now, I caution everybody from doing that. It doesn't automatically mean that just because the euro dollar is moving up that the pound dollar has to. That's not what I was doing. But I did see a support low there, and I did see some volume levels picking up in the pound, moving price back up again. And I wasn't going to trade it for a big move anyway. I didn't anticipate a big move. But I was going to use a relatively small, tight stop on that trade, minus 18 pips on that trade, trying to trade that bounce. So it's still holding right around this support level. I don't know. It looks like later on, maybe during the Asian session, it might spike down one more time before moving back up. But I don't know if this level is going to hold for sure. It's possible. It would definitely be against the trend. I still think that there's more to the downside. I just don't know how soon the next move to the downside is going to be. In other words, it might give us an opportunity to trade something similar to an HL30 and then trade it up for approximately 20 to 30 pips. So that's all we're really expecting on the HL30s anyway, is approximately 30 pips on the trade on that bounce back up. It's not a real big move anyway. It's not like the T2 pattern that we had on Friday on the euro dollar where it just shot straight up. Those are bigger trades. Those are major reversals. This is not, the HL30 is not a major reversal. It's just trading the bounce off of the previous day's high or low in a trending move like this. So I don't know just yet if we're going to get the opportunity to trade a bounce like that. It looks like it is forming a temporary support low here. I would prefer to trade the HL30 in the direction of the trend. So if I don't execute the HL30 on the pound dollar, you'll know it's because it doesn't look right. For whatever reason, it could still work, but if it doesn't look right, I'm going to stay away from it. I do not want to fight this trend. So we were able to earn back this loss by simply coming back over here and trading this breakout, the follow through on the breakout here with the euro yen, which earned us approximately 52 pips on this trade here. Now, I'm thinking that it'll probably go up a little bit higher. Normally, this continuation breakout trade, this technique, the profit target on this trade is 150 pips, but I locked in profits here at that approximately 52 pips here, not knowing if it was going to go much further. I was basically targeting the 115.20 psychological level, and with a little bit of slippage is the reason that it was closing right there at about 17, almost 18. Now, the other thing that I was going to say to also is if I tighten up the charts here, if we go back over here, we have a couple of different levels of resistance. And if I'm going to expect a 150 pip target on this continuation breakout trade, then the 150 pip target has to be, or the placement of that 150 pip target from the entry needs to be or occur before the most significant resistance level. We've got a tweezer top right here from about 3 weeks ago, almost 3.5 weeks ago. And then we go back even further and we have that all-time high here, not all-time high overall, but I'm talking about this time frame, the 1 hour chart here, with what we can see here without tightening up the charts more than this and losing our sense of direction here, because you can't really even see the candle patterns here at this point. But you get my point. 116.35, 116.40 area is resistance. So again, when we're targeting these levels and these take profit levels, they need to develop before significant resistance. I have to be out of the trade with my profit target, or I have to scale out and lock in profits. So basically, if the 150 pip target is, let's say, beyond that high, then I could safely assume that it would probably reach that level, but I need to scale out at one point before it hits this one of these two major resistance points here. The other one, that tweezer top right there, is approximately 116, almost the 1600 level. So you get my point. It's important to scale out, especially in this type of trading environment where, like what happened this morning or later this morning, I guess, depending on where you live, the news is what really triggered that strong move. I'm sorry, not the move, but the news, but the comments that are released to the internet at that time. This reminds me, I mean, we talk about this all the time. It reminds me with a lot of the specific crisis events like the Greece crisis or the Euro banking crisis, or, it might have something to do with Spain for a little while, or, even the United States, or whatever the case is. You're going to get these events. The same thing with the pound. The pound dollar was affected by it over the summer, and then during spring. You get these events where comments or statements from officials, whether they're bank officials, politicians, something like that, will spook the market or startle the market, and they will react quickly. It's just, very often very often people don't get the opportunity. A lot of traders don't know why it's happening. They just see the move. So in this instance, we were in the trade on the breakout, and it was that the statement and the comments that affected the euro dollar that helped push that price straight up there. And you'll notice that will happen very often with these technical setups. The technical setups occasionally will put me into the trade before the news, and then the news will be that it's usually that driver, that catalyst that pushes price to its targets. And then other times, if I don't have a signal before the news or a comment like that, that reaction will cause a signal or price to hit or trigger something, and then I get my entry. It really depends. Every time it's just a little bit different. So again, we're anticipating at this point some more follow through. But I can't rule out the possibility that in this type of market environment, this is about as far as it's going to go. The reason that I'm showing you this level right here is that this is a Fibonacci extension target. And very often with these Fibonacci extension targets, that's about all you get. That's about as far as price goes very often. Obviously we can target the next extension target back up here above the 116.40 area, which would certainly work out in our favor. But what I'm getting at is the conditions, the market environment, it wouldn't surprise me to see it turn around and come back down with more comments that are going to have a negative effect here. Otherwise, if we don't hear any of that, then we could probably expect the trend to continue a little bit higher, and we'll try to trade it to the next Fibonacci extension target back up here above the 11600 level. So we'll just keep an eye on those conditions and watch the news for any comments or statements. So that's pretty much it in this wrap up. In the next update, we'll talk about the daily candles. Obviously, we've got some activity today, so we want to be paying attention to the close of these daily candles to see if it's going to give us any clues. Take a look at the dollar, and then we're going to take a look at the commodities markets as well for some trades for tomorrow.